you could actually put your stablecoins into mechanisms where they could actually earn, or they could actually also be staked, meaning similar to the bank, you put your money in the bank will use your money and lend it to other people taking out loans, and based on those particular loans, they will return portions of that to you as interest. In the same way, you can employ that mechanism also into the cryptocurrency market. But what's interesting about that is when you use and position into stable coins, what it actually does is it removes the volatility, meaning you won't see the sharp drops similar to what has happened to Bitcoin, to Ethereum, to Polkadot, to Solana, even for meme coins that we've seen drop 90+% and to not return. I want to talk about this. I know there are a lot of people who like investing in bonds because when you buy a bond, you hold it till maturity. Whatever amount that you placed in, say you placed $10,000, at the end of maturity, it will still be $10,000. But while you are holding that bond, you get compensated for the time that you're actually holding it, and you get paid interest. And truth be told, bonds are one of the most conservative investments that we have available, especially if you're investing in government bonds, because as they are sovereign bonds, the government will guarantee it. The government will make sure that whatever they borrowed from you, they will pay. And not just that, it's not just about your capital, it's also secured, but the interest payments that you would get will also be relatively secure as well. In the same way, corporate bonds, which may place a higher level of risk versus government bonds. But if you're buying the good companies, if you're buying blue chip companies, the ones that have been there for quite some time, the ones that have a good track record, that they're actually paying their debts, they will reward you with a higher rate of return versus government bonds. However, they have a risk also of default. That being said, over the past few years, bonds have been the go-to investment for a lot of people who have been conservative. I am also a big fan of bonds because it gives me predictability, because it gives me cash flow. It allows me to be able to know and predict and project what I could actually get based on the amount that I actually placed in. I've been saying this over and over that bonds have also been a good hedge, that when the markets dropped last March 2020, of course, we didn't know how it would actually recover. We didn't know how it could actually go. But when the drop actually happened, knowing that you have bonds, it gives you stability. It allows you also to sleep well at night, that at a certain point in this quarter, I will actually get my return based on the investment that I placed in my bonds. Over the past few years, inflation has gone up, interest rates have gone lower, meaning your purchasing power is actually decreasing, and the amount that you're actually earning from these investments are actually decreasing. And if you try to look at it, some inflation figures from last year were above 4+%. Rates of return from some bonds were just around 2%. Prices were going higher, way above what you were actually earning from bonds. And that's why my strategy from bonds also has shifted through the years. You could put levels of combinations for it. You could put it in REITs, or you could put it in dividend paying stock. But at the end of the day, when you enter the route where you would put it in either REITs or you would put it in stocks that have dividends, you would also be subjected to the volatility that maybe after the 10-year period, you don't know what the price of the stock will be. It could be up, but it could also be down. In my opinion, that's one of the pitfalls when you want to get cash flow via REITs or via buying common stocks, is that you have the ability to get cash flow, but you don't know what the price of the stock will be 5, 10, 15 years from the time you invested in, and it could actually be lower. What I want to submit to you is this. For a lot of people who are in the cryptocurrency market, I'm sure you already know this, but if you're watching this and you are relatively a conservative investor and have not ventured into the cryptocurrency market, there are a bunch of tokens / coins that are what you call stable coins. They're stable coins primarily because they are trying to be pegged to a certain currency, and majority of the stable coins have been tried to be pegged to the US dollar, meaning if you have $1, this particular stable coin should be close to $1 as well. Why do I submit this idea to you? You could actually put your stable coins into mechanisms where they could actually earn, or they could actually also be staked, meaning Similar to the bank, you put your money in the bank will use your money and lend it to other people taking out loans, and based on those particular loans, they will return portions of that to you as interest. In the same way, you can employ that mechanism also into the cryptocurrency market. But what's interesting about that is when you use and position into stable coins, what it actually does is it removes the volatility, meaning you won't see the sharp drops similar to what has happened to Bitcoin, to Ethereum, to Polkadot, to Solana, even for meme coins that we've seen drop 90+% and to not return. When you go the stable coin route, there's relatively lower volatility, and then when you stake it or you put it in an earning mechanism, either via a decentralized platform where you either lend it out to people, or to a centralized platform where they have a lot of those savings mechanisms inside of it, you get to earn interest. And what's interesting about that is there are some where you get to stake it and you get to earn over 8-10%, but there are some stable coins that I would see hover around 18-19% as of the time of this video. And what's interesting about that is if you're very sensitive that you want what you have to actually beat inflation, this could also be a good alternative because it actually beats what bonds could actually offer. However, I want to say this, the main difference of this is that it's not regulated as compared to bonds, which there are a lot of exchanges around the world that have it. It's not guaranteed, similar to sovereign bonds or government bonds, that the government will back up your capital, the government will also pay you. When you enter the stable coin route, of course it can give you passive cash flow, but none of those guarantees are there. It's not like also analyzing corporate bonds where you can look at companies where companies have revenue, companies have earnings, and based on that earnings they can pay off that particular debt. So this is something that's relatively new, this is something that's relatively also exciting, but in a way also it poses that type of risk as well. And please don't just buy stable coins and stake it and put it in earnings mechanisms just because I talked about it here. Please never ever buy, sell, hold, or avoid a token or a coin just because I talk about it. It's your money, it's your responsibility. Please do your own due diligence when you start buying, when you start investing. Don't just buy it just because you hear it from my channel. Don't just buy it just because you hear it off YouTube. Don't just buy stuff just because you hear your friends would say it. No one will work harder for your money than you. So please take the time to research it. What I'm sharing here is information based on what I have researched and what I know. And it's somewhat interesting because it gives you the ability to get cash flow, because it's staked, because it's in an earning platform, it's an earning mechanism. But above and beyond that, it removes the volatility coming from the market. One of the risks that you have here, especially if you're looking at stable coins like USDT, is that you have to trust that the entity that issued that really has the capital to back up whatever's out there. I've been a big fan of Luna/Terra and UST because the supply of UST is heavily connected to how Luna/Terra will actually perform as well. But ultimately, because it's so new, we haven't really seen how it will perform in bad times or if there's any bad issues highly connected to it. There's a lot of opportunity right now that you get to have passive return, that you get to have cash flow that could actually beat inflation, that's not just highly connected to bonds anymore. The reason why I say this at the start of the year is please try to research it. Please try to take the time to learn about it. And this is far from what Bitcoin actually is, because relatively some of them are issued by companies, hence they're more centralized, hence they can also be, institutions could also talk to these companies to somehow prevent the movement of certain coins. It's not like Bitcoin that no one can stop it, no one can block it, which Bitcoin is more decentralized in nature, but this gives you the ability to have digitized form of cash/stablecoin with the ability to actually self-custody it, but not just that, have a higher rate of return than what you would get from normal savings accounts and bonds. I'm gonna make more videos about this, more detailed videos on platforms, wallets, exchanges that could give you higher rates of return, that could actually beat bonds over the course of the year. If this is something that's exciting for you, put it in the comment section below. Put in your questions as well. If you want to try the cryptocurrency market, check out Binance. We have links about it in the description below. You can sign up wherever you are in the world. As long as you have internet access, you can do it from your phone. And that's what makes it very, very interesting. If you want to learn more about the stock market, the books that I've written, the courses that we have, check it out in the description below. If you want to support my NFT projects, you can check it out as well. And if you have questions, feel free to put them down below. I'm gonna try my best to be able to answer them and give you as much value as possible. So I want to know your thoughts. The stablecoin staking, stablecoin earning, something that attractive for you? Is this something that you actually like as well? Is this something that you think will substitute bonds or other cash flow laden investments in the future? I want to know your thoughts. Put them down below. And I guess that's it for now. Happy New Year, everyone. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.